First on IGL, that's the one which is reacting a bit right now. How would you approach that stock?
Afternoon, Anuj. No, as Sonal mentioned, I think the prima facie factors which work for IGL is obviously, I think, lower imported LNG. And with LNG prices which have gone through the roof, both in terms of spot and long-term prices as well, the expectations with lower imports of LNG obviously augur well in terms of support of margins, which is reflected by the EBITDA per SCM that they will report. The second element also is the consumption patterns. And the expectations largely is, again, built in both on the PNG and the CNG part of the business, that the input cost inflation that we probably see with increase in gas prices will get passed through to the end consumer. And therefore, I think the element of having a margin hit, I think will be very, very minimal at this point of time. Therefore, I think a complete or almost a complete pass-through in terms of input cost, stability in terms of maintaining EBITDA per SCM, and volumes expected to get held on, both on the CNG and the PNG part. I think the numbers are as per expectation. I think the stock should continue.
Okay, that's on IGL. IT is having a big move now. IT is helping TCS. Let's see the intraday chart on TCS. That's all of a sudden moved to high point of the day. There's move in L&T Tech Services as well, of course. The index itself is up about 3%. There's been a lot of selling in IT. Mayuresh, any IT stock that you would buy here at current levels?
Yes, I think, Anuj, we are adopting a wait-and-watch policy because I think the priced action has been very, very dampening for IT stocks. So as per our own methodology, I think the price strength has come off significantly. Has the earnings strength or our earnings rating come off significantly for the sector as a whole? Absolutely not. Because if you probably look at commentaries, the volume growth for most IT majors as well as mid-cap companies have been very, very decent. In terms of order wins or the TCVs that they probably report have been excellent as well. Attrition issues are something which is causing a huge amount of pain because what happens to wage hikes, what happens to margins related to attrition issues is obviously going to be a painful factor in the next 2 quarters. Along with that, if we do go into a slowdown, specifically in the US and European zone, does discretionary orders come off? And with that, does that have an impact in terms of future revenue visibility? So I think the earnings rating is holding up pretty well for the pack as a whole. Most stocks were coming off in this correction from a late stage base, which is obviously somewhere which warrants that they have been extended from their moving averages. And therefore, I think if they are making bases after this correction is over and consolidating, I think we'll have a look at that. It's a wait and watch at this point of time, but I think the larger names will be preferred as soon as they start breaking out of these bases at all.
Okay, let's look at a stock that we normally don't talk about. Abbott came out with numbers today and the stock's up 7%. Normally, pharma has not done well, but of course, MNC pharma has been a different ballgame altogether. Mayuresh, any thoughts on Abbott?
So decent numbers, Anuj, if I would see what numbers I have seen through. 2 aspects here. One, I think the pricing element in terms of specialties and generics and the approvals thereof. I think a lot of pharma companies are still struggling in terms of having their specialty approvals come through, both because of FDA issues on certain plants and approvals not coming as expected. At the same time, I think if you're looking at the R&D expenditure and the costs that have built into their balance sheets, I think the maintenance of margins, along with expectations, if you probably look at a run rate in terms of formulation businesses for the US, I think they remain a little bit below par at this point of time. So at our global level, in our global focus lists, we do like stocks like Cipla within the large cap names. But what we'll ideally like to see is pricing coming back, more approvals expected to come through. And at some point of time, if the market does go into a time-wise correction, if some of these performers start delivering in terms of margins and numbers, I think a few of these stocks might do well. So it's going to be a very selective approach in pharma, but at our global level, we like Cipla.
Okay, fair enough. We'll do one thing. We'll take a break and approach LIC.
So wait and watch, Anuj, at this point of time. Obviously, what the management has spoken about in terms of increasing their plan for protection business, because that's where they are lagging when it comes to individual policies, and that's where the value of new business margins have taken a huge hit. Their exposure towards group policies at 84% have dragged their VNB margins to 9% compared to a 27 for HDFC, 21, 22 for an SBI, around 18, 19, 20 for an ICICI Pru as well. So with product mix improving, with the more digitalization expected to come through, and with the base effect that the market share still stands at 65%, value of new business at 64%, and valuations still remain very, very attractive. I think there is still juice from a long-term perspective for LIC. So I think there is hope from our long-term investors. The short-term gain is probably getting reflected.